Welcome back to Investing Talk Podcast.
Today we're looking at Ramaco resources. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, we are definitely looking at one of the more, let's say, interesting stocks and materials right now, Ramaco Resources, METC.
Interesting is one word for it. Volatile is another.
Right. It really captures this, tension between maybe past commodity issues and this big future potential.
Exactly. And when you just look at the performance numbers, they're huge.
Huge how?
The long-term picture, the 5-year cumulative return, over 1,200% as of October 2025 anyway.
1,200%. Okay.
And even just this year to date, it's up over 163%. I mean, that's the kind of run that really makes a difference.
But it hasn't been a smooth ride up, has it? We saw that pretty sharp drop recently.
Oh, yeah. That was startling. It fell 32% in just 1 week.
32%.
It did bounce back fast, but yeah, that kind of move really shows the market's got some serious uncertainty baked in here.
So what's the actual business? What does Ramaco do to cause these kinds of, fireworks?
Okay, fundamentally, Ramaco is a leading U.S. producer of metallurgical coal.
Met coal. Important distinction, right? Not thermal coal for power plants.
Absolutely, vital distinction. This isn't the coal facing, all those long-term headwinds. Metallurgical or coking coal is critical for making steel.
Ah, okay. Steel making.
Think of it like a high-grade, specialized fuel. It's essential for heavy industry, for infrastructure building all around the world. You can't really replace it easily.
So the basic business case rests on these big global trends like infrastructure spending, keeping steel demand up.
Precisely. And they've built a pretty strong operational moat around that.
How so?
They're known for being cost-efficient miners. They have their logistics integrated and, crucially, a huge reserve base. Just massive, spread across Elk Creek, Berwind, Knox Creek, Maben. These big properties.
That scale and cost control, yeah, that's tough for competitors to replicate.
Definitely.
But okay, let's tackle the elephant in the room. That 32% drop wasn't random. It came after earnings, right? How does a stock with a 1,200% 5-year return suddenly post numbers bad enough to cause that kind of panic?
Yeah, that's the big contradiction we need to unpack. The recent earnings reports, they've been a real drag.
The drag how?
Well, for fiscal year 2024, revenue landed at $666.3 million. Now, that was down about 3.9% year over year.
Okay, down a bit, but not catastrophic.
No, the real shocker was the bottom line, net income. It plunged, down almost 86% year over year to just $11.2 million.
86%. Wow.
Yeah.
That's more than a drag. That's a collapse. How does the long-term story hold up against that?
Well, right now, if you look at the trailing 12 months, net income is actually negative. It's sitting at minus $32.88 million.
In the red. Ouch.
The sources point to two main reasons for this. One, a temporary dip in global met coal prices. That happens. But two, and this is key, they're making some pretty heavy operational investments right now. Necessary spending for future growth.
Okay. So the market freaks out over the current red ink, but maybe the smart money, the analysts, see it as like planting seeds for the future, spending money to make money later.
That's exactly the bullish interpretation. Analysts seem to be looking beyond this current squeeze. They see those investments as vital for keeping that cost advantage going long term.
And the underlying financials, are they shaky because of this income dip?
Actually, no. That's the other side of it. The financial foundation still looks pretty solid. They've kept leverage moderate, and historically, they generate positive free cash flow.
Right, free cash flow, FCF, the actual cash left after running the business and investing, that's crucial.
It really is. Positive FCF shows they aren't just, burning through cash even when earnings are down.
And that FCF has supported buybacks and dividends.
Historically, yes. Consistently. The dividend right now yields about 1.95%. That's still $1.55 per share. And liquidity looks robust, too.
What tells you that?
The trading volume is really high, around 7.1 million shares a day. That suggests a lot of institutional players are involved, and you can get in and out easily. Good market depth.
Okay, so they have the financial strength, the liquidity. They're not just scraping by. They have the resources to fund what sounds like a really big strategic shift. Let's talk about this critical minerals initiative.
Yeah, this is the part that gets analysts really excited.
Mhm.
It's potentially transformative for the company.
What is it exactly? The Brook Mine Critical Minerals Initiative.
Right. They've basically discovered that within their existing coal deposits, there are also valuable non-coal elements, critical minerals, rare earths, and things like that.
So wait, they're looking beyond coal? This sounds like a major diversification, almost future-proofing the business.
That's absolutely the idea. It seems to be a two-pronged goal. First, maybe establish a national stockpile of these minerals. Think about the geopolitical angle there, supply chains.
Huge implications, especially these days.
Right. And second, it would fundamentally diversify their revenue, move them away from being just a met coal company. This could be a massive, massive growth engine, potentially much bigger than the current coal business.
Okay, national stockpile makes my ears perk up. That sounds like government involvement, maybe big contracts. Do we know anything about the economics of this? How real is it?
And that's the catch. That's where the volatility comes back in. The sources say details on the actual economics, the project costs, the timeline for commercializing this. It's all still pretty sparse.
So highly speculative at this stage.
Very much so. But the buzz around it is intense. You see chatter in market forums about potential government partnerships, maybe key permits coming through that could fast-track things.
Okay, so the investment thesis is kind of two parts then. You buy it for the solid, cash-generating, even if cyclical, coal business, but you hold it for this potentially explosive but still speculative critical minerals upside.
That sums it up really well. Now, how is the market actually, pricing this tension? What are the charts saying after that huge run and the big dip?
Yeah, you'd think the technicals might look exhausted or broken.
Surprisingly, no. They actually seem to confirm the long-term strength is still intact. The stock is trading well above both its 50-day and 200-day simple moving averages.
Okay, classic definition of a long-term uptrend hold.
Exactly. Textbook.
What about momentum? After running up 163% this year, surely it's overbought.
You'd think so, but the RSI, the 14-day relative strength index, is sitting around 46.67.
Mid-range, neutral.
Right, which is really interesting. It suggests that despite that massive rally, the stock isn't technically overbought or tired right now. There might still be room for this bullish story to play out. It kind of confirms that recent dip was maybe more about the earnings shock than a technical breakdown.
Okay, so technical strength holding up, combined with, you mentioned, really confident analysts. That's an unusual mix, especially with negative trailing income. How strong is that analyst conviction?
It's remarkably high. The overall consensus rating is either strong buy or moderate buy.
Strong buy. Wow.
And we've seen a flurry of recent upgrades, like Benchmark just raised their price target to $38 at the end of October. But the real eye-popper is Baird. They set a target of $63.
$63? How are they justifying that when the company just posted negative income? Is that purely betting on the critical minerals lottery ticket paying off?
That $63 target implies they are absolutely pricing in huge success on the critical minerals front. They must be forecasting massive future earnings from that diversification, assuming it ramps up quickly and successfully.
So they're looking way, way down the road.
Completely past the current coal cycle noise. The average 12-month target is a bit more grounded, but still very bullish at $43.67.
Wow.
That implies, what, about 55% upside from where it is now?
Still significant upside of potential baked into the average.
Right.
For someone maybe looking to trade the volatility short term, what are the key levels to watch?
The technicals suggest pretty clear near-term support between $27.50 and $29.
Okay, that's the floor for now.
Seems to be. And given the analyst targets and the trend, the sort of expected bullish range over the next, say, 3 months, looks like $27 up to maybe $38.
So watch that $27.50, $29 zone. If it breaks below that...
Then yeah, you'd probably need to reassess the immediate bullish case.
All right, let's shift to the near future. What are the specific events, the catalysts that could push the stock towards those bullish targets?
The absolute biggest one is the Q3 2025 earnings call. It was scheduled for October 28th, so results should be out or imminent.
And what are people listening for on that call?
2 main things, really. First, updates on cost control. Are those big operational investments starting to pay off? Are they managing costs effectively in the core coal business? Easing that earnings pressure is key.
Makes sense. And the second?
The Critical Minerals Initiative?
Yeah.
Any tangible updates? Have they secured permits? Are there partnership talks? What's the timeline looking like? Any concrete news there could be a major mover.
Okay, earnings call is number 1. Anything else?
Keep an eye on analyst actions. We've seen a lot of upgrades lately, as we mentioned. More of those would reinforce the positive sentiment.
And policy, that national stockpile idea.
Exactly. Any regulatory green lights, government endorsements, anything related to project expansions, especially for critical minerals, that could act as a huge accelerant given the strategic importance.
Okay, that covers the potential upside drivers. Now, the risks. This isn't a slam dunk. What could go wrong here?
Right. You always have to look at the flip side. Despite the diversification story, it's still very much tied to its core business risks. First and foremost, commodity price risk.
Met coal prices.
Yep. Earnings are still super sensitive to swings in global met coal prices. If prices were to drop significantly again, that short-term earnings pressure comes right back.
Okay, price risk. What else?
Operational risk. This is a big one, especially with major expansion and a whole new venture like critical minerals. Any project delays, any cost overruns,
Yeah.
especially at that speculative critical mineral site, that could really hit near-term results and shake confidence in the long-term story.
Execution is key, especially on something new and complex.
Absolutely. And finally, just broader market risk. We talked about the volatility.
Huh.
This stock has a high beta 1.28,
Meaning?
meaning for you, the listener, if the whole stock market or the material sector drops, say 10%, historically, Ramaco tends to drop about 12.8%. It magnifies market moves, both up and down. It's highly sensitive to overall sentiment.
So definitely not a stock for the faint of heart.
Not at all. You've got these huge potential growth drivers, amazing analyst backing, but balanced against real short-term earnings issues, commodity cycles,
Yeah.
execution risk on a new venture, and that high volatility.
So pulling it all together from the source material, the overall analysis comes out strongly positive, right? A bullish rating of 9 out of 10.
That's right, a very high conviction rating. And given that mix of risk and reward, the analysis suggests it could appeal to different types of investors.
How so?
Well, it looks attractive for short-term trading. You can try to play the volatility around earnings news, catalyst events, updates on the minerals project.
Riding the wave, so to speak.
Kind of. But it also seems compelling for long-term investment. If you believe in the scale, the cost advantages in coal, and especially if you buy into the potential of that critical minerals pivot changing the whole story.
Then you might hold through the volatility for that bigger payoff.
Exactly. You're betting on those structural growth drivers and the diversification playing out over time.
So Ramaco Resources really feels like a company at a crossroads, a story of strategic change, moving from its established roots into something potentially much bigger, but also much less certain right now.
That's a good way to put it.
Ultimately, it seems like its performance, both near-term and long-term, is going to boil down to just two key things: how well they manage costs and execute in their core coal operations, and how quickly and successfully they can turn that critical minerals potential from an idea into actual profitable reality.